You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. Speaking of the network, we had our big, great live option block show yesterday. It was a great fun. I met a few Vol Views listeners there, so thanks to all you guys who came out and saw us there. We always love to see the listeners and put the faces to the names that we see on the emails and in the questions and in the chat room and in the chats and all sorts of other ways you get us, Twitter, etc. It's always fun to see that stuff, so thanks for coming on. We'll have to do a live Vol Views one of these days. We did one a few years back at the big FIA Expo here in Chicago, and that was pretty fun. Maybe we'll see if we can do something like that again down the road, because this is a very special, unique show and has a very special and unique audience, and we love to interact with you guys because you guys have such great questions, such great comments, and such great insight into the world of volatility. And I mentioned the network is expanding. Where can you find all of those expansions, all those new programs? Well, of course, you can find them on the mothership, theoptionsinsider.com. All of our shows are there, including all of our content, unusual activity, analysis, education, breaking news on the options market, etc., etc. It's all there. Surf on over, check it out. Of course, you can find all the programs wherever you find Volatility Views, iTunes, Stitcher, Aha Mobile, even our mobile app, available for iOS, Android, and the Fire OS. And that new show is indeed our Options Oddities program, where we break down a lot of cool and interesting, unusual activity going on in the world of options. We do it live every day in the swim lessons room over there on the TD Ameritrade platform. So you can surf on over and join us and ask your questions live and follow along with our screens there on the show. It's pretty fun stuff. All right, and joining me on the old Volatility Views program, first beaming in from the heart of finance known as New York City, none other than Mr. Jared Woodard from BGC Partners. Jared, welcome back to the show, sir.
That's right. It's great to be in the financial capital of the universe, doing what we do best.
Now, we here in Chicago, we kind of eschew New York because they call it the finance capital, but it really is, bonds and stocks. You want to get to the good stuff, the options and the futures, you got to come out here.
Well, you can do, the nice thing about modern markets is you can do it from anywhere, which raises the question, why hasn't, Bermuda or the Bahamas become the financial capital of the world?
We're still waiting for that. You're right. But you're right. It has expanded. You can go, quote unquote, anywhere, but still you got to do a lot of it out here in Chicago, which we still like. We're very protective of our products out here. Speaking of exchanges in Chicago and things we're protective of, Mr. Mark Sebastian is joining us today from optionpit.com, and he's actually beaming in live from not that far from the pits over there at the CBOE. In fact, he could reach out and touch the VIX pit right now if he wanted to.
Yeah, we're up on the fourth floor. I've got the Option Pit conference this week, so I've had a bunch of my best and brightest in town, and we've been meeting in the into CBOE, hearing the roars when the market sold off, and or a hot girl showed up on TV.
So you're saying nothing has really changed?
Indeed. Except for the roar is a little duller because there aren't as many people.
Yeah, the roar, I think, was a little bit more of a quiet murmur these days.
Yeah, exactly. It's like a grumble.
You don't have it spring up from like the OEX or the S and then sweep across the floor in this epic cacophony of noise and terror. Now it's just kind of like, oh, something's happening over there. Maybe.
Yeah, there are 2 guys left in the OEX pit now, plus a DPM. It's unbelievable.
That is just a sign of the times, listeners. If you're not familiar with the OEX, that is, of course, the S&P 100, and it was, for many years in the early days of the CBOE, it was the marquee product, the premier product, before the real rise and onset of the SPX to become the big marquee financial name and product, and, of course, the rise of VIX and everything else. But that is pretty humbling to think about that OEX, just this once titan, is now pretty much reduced to that. But c'est la vie, listeners, we're not here to mourn the OEX. We're here to dive into the world of volatility and volatility trading and analysis. So let's get to it and dive right into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that funky tune always gets me in the mood to review some volatility. We are, of course, recording the show, listeners, on Friday, September 12th, right around 1 p.m. Central Time. So still a few hours to go in the session today, but so far, at least, we're finally seeing a bit of a sell-off. The market has finally proven that it can indeed pull back from that glue stick known as the 2000 strike. We were stuck there for almost several weeks, it seemed like. Market could not go anywhere away from that 2000 strike in the S&P. Today, it's selling off about 0.75 of a percentage point down, about 13.5 handles to 1984 today. We'll see how the day progresses, if we stay down there or if we indeed rebound back. The Dow and the Qs both down about the same approximate percentage level. And the VIX Cash, not surprisingly, taking it up a little bit today, up about 1.3 handles to 14.11. So it's been an interesting week from a vol perspective. A lot of that, actually, the movement we saw and developments from a VIX and VIX Cash perspective coming in the last couple of sessions. So more of a ladder-heavy week this week from a VIX perspective. Jared, perhaps we'll start with you. What in this week's activity really caught your eye from a VIX and a VIX Cash perspective?
You can't do better than VIX 14 in a period where we're used to seeing a 12 handle. I think it's for as these things go these days, pretty remarkable. And depending on how you're positioned, seeing this big move higher in implied vols could be the breath of fresh air that you've been looking for. I guess it could be terrifying for some. I was talking to someone today about activity in the weekly options and how some investors have gotten so used to selling weeklies and being short vol at the very front end of the curve that we were wondering whether a big move in the market would really cause some turmoil among those particular market participants, and it looks like we're starting to get the early stages of that, perhaps.
Yeah, happening on a Friday today too, so maybe they're scrambling to cover here, seeing what's going on before the weekend. Maybe they're taking those shorts off the books before it can bite them too much. But you're right, that is kind of a phenomenon we've seen developing of late, ever since the onset of the weeklies really becoming these big popular products and seeping into other things like the S and the VIX and things like that. Is, they were designed for the one use case, which is near-term hedging of specific events like non-farms or earnings or what have you. And instead, they've been embraced almost completely in the polar opposite fashion as a premium selling vehicle pretty much across the board. So instead of being risk mitigating, they become these very much risk additive tools in the marketplace. And you're right, we see some interesting developments in the VIX and in the S as a result of just flurry of premium selling we see every week. All right, and Mr. Sebastian, in addition to doing a fun live option block yesterday and touring the CBOE and all the fun stuff you've been up to this week, what else has caught your eye from a volatility and a VIX perspective this week?
Yeah, today we continue to have really low realized vol, and the VIX kind of go up and up and up. If you look at a 14 VIX, there's no way to justify it based on movement in the underlying. And The futures have been rallying as well. The OCC future is getting near 15, which is, just shockingly high. And I just want to go palms out. But who knows? We do have the sanctions that came out today, and then, we've got a Fed meeting next week and the Scottish elections, and, who knows? So that's where a lot of this is coming from. Where there's real weakness is the Russell 2000. The S&P's down 0.6%. The Russell 2000's down over 1% this morning and, this afternoon now. And the Russell VIX is now trading 1830, which is a pretty nice premium to VIX Cash.
Yeah, it'd be interesting to see if that will result in some of the trading like we saw last time when there was a decent discrepancy between RVX and VIX, if some of the paper will follow suit and try to trade that discrepancy. We'll get into that in a little bit, listeners. But your first point is an interesting one there, Mark. Something we touched on a little bit in our live option block show yesterday, but we can, of course, get into in more detail here on the old Volatility View show, which is the exact point you made, that you realize vol, no matter how you dice it, 10-day, 30-day, what have you, is pretty much non-existent. Today, notwithstanding, that's going to bump those numbers up a little bit, but they were hovering around the 5-6% level. To see VIX Cash anywhere north and the futures heading anywhere north of the 12 handle is just probably madness to a lot of people who can do a lot of basic math out there. But you're right, there are some macro factors that are keeping people from aggressively coming in and hitting those bids. But I wouldn't be surprised, and maybe we'll say this for crystal ball, but I wouldn't be surprised if, coming out of the weekend, if some of these developments don't perhaps develop as people expect, that we might see some people coming in and trying to, let's say, ease that discrepancy a little bit.
Yeah, it needs to happen. So we'll see. It's a low volume day. If the rails fall apart today, who knows? Maybe we'll get a VIX of 15. So, which would be just, the silliest thing ever. Everybody here in the room would be licking their chops if we got a VIX that high. Key is to have bullets in those low vol periods, guys.
It does, see? That's why you buy premium, so for days like today, you can sell it and take advantage. I hope Don's not listening because I just blew his mind. All right, but you're right. It has been an interesting time looking at what's been cooking in the realm of VIX, so we'll kick off there with, some of our look at the VIX options. It was an interesting day. Maybe we'll start there, actually, from a VIX options perspective. The usual things are developing out there. Of course, we've talked in recent shows. A lot of you get very interested in how heavy the calls are to the puts out here. Coming off a bit, got up to the 4.4 level, which is astronomical by VIX standards, by any product standards. It's coming off a little bit up to about down to about 3.8 today or so. So perhaps a little bit of a lightening of the load from a VIX call perspective. We'll see how this rally, if it hangs around for a while, opens up more strikes to the downside, how that impacts that indicator going forward as well. But what really caught our eye, and if you surfed on over to the Options Insider this morning, you saw this. This was a pretty sizable trade going up out here in VIX. By the way, today out there in VIX land was 13-1 calls to put. So if you were playing the home game, it's way beyond even 4-1 today, in at least today's paper in the early part of the session. And what we saw this morning was kind of interesting. It caught our eye, was just some size upside love here in VIX land to the tune of the OCC 22s. That's where we really saw the biggest action. When we started off this morning, they were lighting up the tape to the tune of, let's see here, 26,700 contracts going up on splits for about 42 cents or so. Paper buying all of that stuff, pretty much buying anything it can get its hands on out there. And then as the day went on, they kept buying more and more and more. 45,000 came in after that initial 26,000. And let's see how the total stands so far today as we look. As the day has progressed so far, we're up to 138,000 on this strike. Now, that's all pretty much paper buying for a variety of prices, 42.5, 45, beyond. Not surprisingly, the VIX up, these calls getting bought up. They're bid out now 45 cents at 55. These things have just been gobbled up like crazy. Again, there is 121,000 open on the strike, so there could be something to it there, but it looks like this is perhaps more piling in, more opening paper for what's going on in VIX land. Mr. Sebastian, what's your take here? You know, wherever we talk about upside calls and VIX, it's a little bit of a different beast than when we're talking about some of our other names, because clearly there's a lot more swirling around behind the scenes in VIX than there is in, let's say, some of the smaller equities we talk about. People buy upside calls. I mean, clearly there was something going up OTC that this trade is against.
Yeah, OTC, or it could be a long position. Who knows? He's paying, whoever's doing this is paying 50 cents now. They're doing a relatively large blocks. They paid 42.5, 45, 47.5, now 50. Probably will end up paying 55. The guy has an axe to grind. The open interest is about 120,000. He'll end up doing, I bet you, 150 or 200,000 by the end of the day. You know, if you got an axe to grind on selling VIX calls, the Yak 22s are bid. So go out and sell them if you got an axe to grind.
Yeah, take advantage of this guy is giving you here, because he's bidding up some upside here in October. And listeners, if you're wondering why Mark sometimes sounds wild, he's in a tunnel or a tin can, is because he's using up all the Wi-Fi there at the CBOE to bring the show to you. So ballyhoo to him, sir. I'm sure everyone else at the CBOE is saying, where is our bandwidth today? It's all going to Mark. Talking about what else we're seeing in the VIX options land, we look at all the hot strikes that are lighting up our tape. In addition to the OCK 22s, I'm guessing they're going to be on the chart next week, but we're looking at what people are trading right now. The big name on the chart, the number one on the top 10 here for VIX land are the SEP 19s. And pretty much, again, looking at the list, listeners, all the way down until the number 10 slot, pretty much all calls yet again. So surprise, surprise out there. The VIX 19s having a whopping about 300,000 open on that strike. And then coming down to the SEP 20s, 278,000, OCK 16s, 250, and then the SEP 17s, 241, and on down SEP 16s and Jan 20s with about 225 and 230 there. And then the SEP 15s, 218, the OCK 18s, 210, and then rounding out the list, the number 10 slot are the SEP, actually number 9 slot, the SEP 12 puts, actually, with 201,000 open. So there are some put lovers out there, listeners. Don't listen to the stats and think there are no puts open. Not many, but there are some. And then the OCK 20 calls rounding out the list, 200,000 about even here on the OCK 20s open. Overall, about 8.8 million contracts open out here in VIX land, 7 million pretty much even, which is odd, open on calls, and a hair shy of 2 million open on the puts, about 1.83 million. Before we move off of VIX land for a second, I want to address something we were talking about on last week's show. All of us talked about the VIX recalculation, what a big deal that was to incorporate things like the near-term front week weeklies into the VIX. That seemed to us like it was really a game changer for the product. It was going to change the way it worked, the way it calculated, definitely increase the vol we see out there in VIX land. It seemed like a very, very large change, but it seems like there's been an update to that since the last time we did our show. Mark, you've been down there over at CBOE land in the heart of all things VIX, and they gave you a bit of an update what they actually meant when they said they were adding the weekly. So why don't you clarify that for our listeners here?
Well, the VIX calculation, they're not actually adding, like, using front month weeklies or anything like that. What they're doing is, the old calculation was they would, like, right now they'd be using October and November, or they'd be using September and October, and September would be rolling off today. And then they would have to be basically extrapolating into 30 days the regular October contract, which has more like 36 days, and they'd still have some in November in there. Now what they're going to be doing is using the two weekly or regular, whatever two contracts, one that's inside 30 days, one that's outside 30 days, and kind of averaging the two to come up with the VIX. It should be much more stable, give us a much better view of the VIX itself, and should make kind of calculating simpler and more stable, and they'll never have to extrapolate the VIX again. It'll only come from an actual hard number. That's what really adding the weeklies means.
That seems to make a lot more sense, because all of us here were kind of shaking our heads saying, wow, they're really, despite CBOE's protestations in their press release that it wasn't a game changer, it really sounded like it was a big game changer for the product. Now, the way you describe it, it seems to make a little bit more sense in terms of what they're thinking. Jerry, what's your take on this? Perhaps not as dramatic of a change as we initially thought last week.
Yeah, it sounds like it. It sounds like, and I'm probably a little bit more understandable a rationale for including these in the first place.
You're right, because on the surface it seemed like, what are they doing? They're just throwing in these front week products that are all gamma, all crazy, and it's going to make the VIX certainly maybe more interesting to watch, but I'm not sure if that's exactly what they want in a product that's traded so widely with such a broad number of people, that to have people just, this thing just moving around now willy-nilly on the whims of the pulled by the weekly option out there. That could have been a recipe for disaster. So a little bit more clarification on that. So good thing you were down there at the CBOE all week, Mark. You mentioned before, too, we talked about the weeklies in the VIX being incorporated, the SPX weeklies being incorporated into the VIX. That, of course, brings up the conversation of VXST. We talked about it last week's show. Hey, maybe the notion of incorporating this front week SPX into the VIX essentially means VXST is done. But now with this change, it doesn't seem that to be the case. And of course, this week actually, it seems like VXST caught a little bit of life actually again. So that's nice to see that this product finally maybe resonating. Of course, we said this before. It's spiked and then kind of trailed off. We'll see if it can maintain these levels. But we talked for a while. The ADV was relatively light, about 500 contracts. Open interest is about 1,500, and that seemed to be the nature of the beast. This week looking a lot more robust. We're looking at an ADV of about 1,000 contracts a day. Some spikes fairly high this week. Open interest hovering just shy of 5,000 contracts. So some people are coming out to play this week in VXST. Not so much today, though. Only 40 contracts going up so far today, with about 2/3 of the session down. So we'll see if today changes that or not. But maybe today is the day that puts the lie to all of this. But it seems like, at least so far this week, that VXST caught some fire, got some interest. Maybe the information come out of the Middle East and Russia and everything else, getting people to play in the nearer portion of the vol curve. Looking at what they have been playing in actually out there, looking at the hot strikes in VXST, such as they are, the top two are actually expiring on the October 1st cycle here. So looking at those, puts actually on the top of the list for a change. That's very unusual for any volatility product. VXST 12 put on the October 1st cycle here, 1,000 of them open there. Then the OC 25 call, also 1,000 of them. Perhaps that went up on a risk reverse. I'll have to dig in and see exact same open interest numbers there. Then it drops off a bit. The OC 15 calls for about 600 open, 400 of the SEP 18 calls, and then pretty much off a cliff from there, a couple hundred each for the rest of the list. But a few puts making into the list, which is interesting. Total open interest, like I said, about 4,500 contracts on VXST. About 3,300 of those falling on the call side, about 1,200 on the puts. So a little bit lighter from a call-heavy perspective than some of its other counterparts. Of course, that wasn't the only news, the only developments out there in VIX and volatility land this week. We didn't have time to touch on it last week, but it was a very big development, so we're going to devote some time to it now. This is indeed the announcement that CBOE is yet again expanding their family of VIX products, this time into a little bit different direction than they've gone in the past. If you've been following these announcements in the past, listeners, you know they've announced things like single name VIXs and oil VIXs and gold VIXs and all these other things. Some of them have taken off, others not so much. Well, they've gone in a different direction this time, going into fixed income land, something we talked about with increasing frequency here on the show, as the vol in the bond land seems to be a little bit more attractive. CBOE clearly noticing that as well, because they announced back at their conference in Ireland that they're going to be launching a 10-year U.S. Treasury Note Volatility Index, going to be ticker symbol, I believe, VXTY or VXTYN here. I see a couple of different notations of it here in the release. It's going to start trading on Thursday, November 13th, of course, pending review here from the SEC. That's an interesting development. You know, we've had some debates in the past here on the show, things like GVZ, why hasn't it taken off, and things like that. It's kind of an open question which camp this one will fall into, if it'll be one of the more tradable ones or if it'll become one of these esoteric things that people watch and no one really trades. Jared, I know you're pretty excited about that. What's your outlook on this, and where do you think it'll eventually land here, this new VIX 10-year product?
I think it sounds like a fantastic product that is going to have a really natural audience, and I'm real optimistic about the prospects for that product. It's an environment that I think you have a lot of people already interested in where the underlying is going, and it's a situation where it seems like there's nowhere to go but up for volatility on a number of fronts, but especially in interest rates. And so it seems like it could be a real natural fit for where the market already is conceptually.
CBOE certainly seems to think so. They think this is going to be a slam dunk for them, but of course we've heard that from them before,
Yeah.
particularly with Apple VIX and things like that never even got released, which I think is a surprise to a lot of people. Mark, where do you fall on this new Treasury 10-year VIX product?
I myself included, I just pulled the room and I'm looking at 10 different people shaking their head no. And, we were talking to a couple of Eurodollar guys earlier today, and, if you can get some interest from a couple of the customers, maybe, but I don't know. You think Bill Gross is going to want to play in VXTYN? Because that's what you're going to need.
Yeah, you're right.
I mean, I think an end user that would be a good fit would be someone much smaller who might be inclined to be buying straddles on the 10-year or the 5-year, but instead, if they can trade something that's has the same advantages that you might describe someone for trading a VIX futures instead of just trading SPX straddles all the time, I think those same advantages are going to be evident here. And if somebody wants to get long, Treasury volatility without being tied to a particular strike price, I think it could be a real good use case. Which it's a fair criticism that there's been some really attractive products with seemingly natural markets for them before. So you never know.
Yeah, I mean, and that's my point is, I would have thought something like VXST or GVZ would have traded. They have a natural audience, and they've gone nowhere.
I will direct the listeners to our famous debate here on the program where I insisted that GVC futures existed, and both Andrew and Jared insisted I was a madman and that they did not exist. And
then they exist.
Yes, they exist. They trade about one contract a month, but they do exist.
Yeah. Well, speaking of GVZ, gold vol has been really exploding lately. So even though the product as a tradable product might not be especially vibrant, the index and gold volatility as a concept is alive and well.
What caught your eye out there specifically there, Mr. Jared?
Well, you had the overall trend in implied vols in gold options, both the GLD ETF and in the futures, had been down for most of the spring, flat through most of the summer. Lately, we've had a big spike. The GVZ index was around 14 at the beginning of September. Right now, it looks like it's just a little bit shy of 18. So that's a 4-point move in a matter of days, and it's at the highest level since I think March of this year. So it's a pretty big move for the index. And when you look at what's been happening, in the underlying, it's not a far stretch. I mean, this big sell-off in gold has it down to the lowest levels since the beginning of the year, and so it makes a lot of sense in terms of the underlyings. This is, I think, the tempting moment where we want to say that rate expectations are changing, inflation expectations might change, and maybe someone's positioning that way. But I'd be a little bit skeptical of that kind of an explanation at this point, just because you're not seeing as dramatic a move. You're seeing move in treasuries, obviously. I'm always, I guess, a little bit skeptical of the link between precious metals and interest rates. But there's lots of room for disagreement about that.
Well, Jared, I'll tell you about gold volatility. Right now, the market is exactly split on where it's going to go because calls and puts are trading at a 1-to-1 ratio in the GVZ options. 0 versus 0.
I was just pulling those up myself.
Open interest of 800 some odd contracts. So, that product's dead. But yeah, I agree. I mean, I'm looking at GVZ. It actually is picking up some momentum. Maybe gold will start to get interesting. I think some of the guys here think it's more of a strength in the dollar trade. Rather than kind of an interest rate trade, some of the trouble gold's having.
Yeah, gold, of course, we should mention, taking it on the chin today, even more than the broad indexes, down about 1%, a little over 1%. GLD right at 118 right now. A lot of people like, of course, good old GLD, and still GVZ not trading a single contract today. I was amazed there was 800 open out there. Where did all that come from?
Yeah, I was actually shocked. It's double average open interest.
So someone played there recently. Maybe the same guy who's playing in RVX is slinging both of those around today. Interesting stuff.
Yeah, well, all the money he's going to make off that trade, he's going to lose in the bid-ask spread.
Yeah, pretty much, unfortunately. Of course, we're talking about metals here. The other side of that coin, at least recently, then kind of been moving a little bit in concert with the news is, of course, the energy sector, and particularly oil. We had some uncertainty in that area this week with the announcement of the big quote-unquote strategic plan against the ISIS rebels or separatists or terrorists, whatever you want to call them over there in the Middle East. I think coming out of that announcement, there might even be more uncertainty. Let's say it wasn't perhaps the most concise and clear in terms of explaining what they're actually going to do. Jared, what's your take on the impact leading into that announcement and perhaps coming out of it, what we saw out there in the crude vol?
Well, crude's been hit so hard, now below $93 now in the futures, that you're getting that move in implied vol on the other side of the coin, where it's obviously not a bid for some kind of breakout in the price, but rather looking at the futures falling, you're seeing people kind of hedging on the other side of that coin. I think it's still an interesting environment for Europe. I mean, their energy needs are so different. I was reading a story today about the problems that Ukraine is having securing supply for the winter, but I don't think that's what's impacting the West Texas intermediate market right now. And so instead, I think that the spike we're seeing, you've got gold implied vols up pretty sharply, and it's obviously one of those situations where in crude oil you can have big moves in vol on a price change and price expectations in either direction.
Well, since we're talking about international vol, that's always where we like to wrap up the volatility review. Jared spends his days knee-deep in his international vol tracker, watching the vagaries of vol beyond these here borders. I know it's surprising, listeners, but volatility does exist beyond the U.S., and they do trade, and it does develop out there. A lot of stuff to watch out there these days, Jared. Of course, I mentioned the Middle East. Of course, we also have what's going on in Scotland. You pick your region. There's something cooking out there. So what's been catching your eye from an international vol perspective over the past week?
Yeah, the Scotland story has still been pretty huge and pretty interesting to follow. We in our latest update from BGC, we had a look at the leak, I would call it, of implied volatility from the pound and the dollar out into equities in the UK, presumably on some worry over how the referendum vote would go. I think that the no campaign is looking a little stronger than it did, I think, this time last week. Some of the most inflammatory polls haven't been confirmed by more recent updates. But there's still plenty of a risk premium in there, and you're definitely seeing a really big bid in options on the FTSE 100 relative to where the realized vol is in the index. So that creates some potential opportunities for investors who want to trade on that situation. Another interesting case, just in developed markets overall, we've had such quiet trading up until the last few sessions of this week, really. But overall, still very low realized volatility. Implieds haven't been following those down this month, and so we like to look at things in terms of percentile ranks to incorporate lots of history and kind of normalize it. And developed markets around the world, from U.S., Japan, Great Britain, even Canada, were in the top decile versus the last several years of history in terms of the ratio of implied to realized vol, suggesting that the options have remained pretty well bid in spite of very quiet markets. And we're getting a little bit of sell-off today, obviously, in the U.S., but even so, it looks like there's a pretty hefty premium out there that has remained in these world equity indexes.
All right, and that's going to do it for our volatility review, and now we're going to keep on rolling right on into the volatility voicemail segment.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. This is personally my favorite portion of the show. No offense to you guys, Mark and Jared, because this is the portion you guys get to join us here on the old Volatility Views panel. Make your questions and comments known to your fellow listeners, just like our first listener did, Mr. Victor C. He writes, do you think the failure of VXST has to do with the product having too much vol for most people? Is it just too wild of a product for the mostly institutional VIX crowd? Interesting question. Maybe a little bit strident in the terminology there, Victor. You know, I've toyed with the idea, is the VXST not perhaps a great success? I don't know if you can really call it a failure yet. And like I just said, this week it did have sparks, signs of life this week. The ADV, the open interest, all having spiked this week. So, of course, today, not so much. We're back to the 24, 25 contract type day. So it is a bit of a mixed bag out there. You know, we've talked about it a lot, about why we think that is, you know, with everybody on the show lately. It seems like, you know, with a lot of new products we see in the derivative space, everyone kind of plays that wait and see game these days. You know, the market makers have been very much disenfranchised. It's expensive and risky to add new products. So they don't dive in with the gusto that they used to maybe 5 or 10 years ago on a new product and really start providing a lot of deep liquidity right away. They wait until the liquidity materializes and then they can dive in with less risk. So that's part of the problem. Also, indeed, one of the problems we saw with the weeklies. They didn't embrace them at all. Excuse me, not the weeklies, the minis. And they went the way of the dodo as a result, or in the process of doing so. VXST doesn't seem to be going the way of the dodo of yet, but it certainly is not lighting up the tape to anyone's expectations. Certainly given the lead up to this, the better part of a year, we heard about this product, and it was coming, and it launched, and it had some spikes, but it's been so much a bit of a whimper so far. It'll be interesting to see. What's your take, Jared? Do you think it is just the too much vol that's scaring people off on the institutional side, or do you think it's more of the chicken before the egg kind of thing? Everyone's waiting for the volume to materialize, therefore there's no volume.
I think that there's a bigger picture issue in play as well, which is that the market overall just doesn't have the kind of volume that we're used to, and that would support, I think, growth in a lot of new products. Just plain vanilla equity market volume is not where I think a lot of people would expect or maybe like it to be, and so you're seeing, you know, pressures, I think, across the industry on people on both sides of a trade ticket, looking for good opportunities for the buy side, looking for, you know, activity on the sell side. And when you have this kind of quiet overall wait and see type of market, you know, even away from financial markets, look at the broad economy. You don't have the kind of capital expenditure, the kind of big investments at the corporate level that would indicate confidence and a strong commitment to the future. And in that kind of this sort of wait and see, buybacks galore attitude across the economy, it makes sense coming back to, you know, this particular specific example, that, you know, you're not going to see a massive growth in something in such an environment as this. And so, you know, beyond the particulars of VXST, I don't think it's a vol issue. I think that if you have a market that's a little bit more active, I think that we've talked about the use cases for VXST many times before, and I think those are pretty rock solid conceptually, and that it has a lot more to do with the overall market environment, the sentiment among market participants, and the basic tolerance for risk and desire for risk that we're not seeing right now like we did in years past.
Well said, sir. All right, good question there as well, Mr. Victor C. Moving on to our next question here, we got coming in from, I like this handle, Señor Pablo, a listener of the show. He likes it, and he writes, I have a question for Volatility Views. It's my favorite show on the network. Thanks for the show, Mark, and please say hi to Jared and Andrew for me. Well, Jared, I can say hi to you. Andrew, unfortunately, not with us today. He's hither and yon, I believe, in New York today, actually. He was in town yesterday, so I got to see him yesterday, but not so much today. But, Jared, you can take your hello here from Señor Pablo.
Fantastic.
I can tell. He's super excited, Señor Pablo. It's hard to tell when he's dialing in from that line over there. It's a little muted. It's hard to tell his true enthusiasm, but he's very excited. I can tell. All right. He goes on to write here, you guys have mentioned some of the VIX competitors in the past. It looks like we'll probably get at least one of them, if not both, this year. Which one, if any, do you think has the best chance in the marketplace? He doesn't specify here which particular competitors he's talking about. I'm going to assume he means Some of the more prominent ones we've discussed in the past, like the Whaley product, and I believe the Voldex are probably the two he's talking about. Those seem to be the most in the news. Those seem to be the most prominent out there in terms of VIX quote-unquote competitors. Of those two, I've only really heard some theoretical talk and some VIX bashing from Whaley about the Whaley product. I haven't seen much else beyond that. It seems like of the two, Voldex a little bit more farther along the product development pipeline. They have an exchange attached. ISE, of course, they were just in town this week talking about Voldex and things. So that one seems to be a little bit farther along. Of course, there's still questions with that one too, in terms of underlying and things like that, and how it's going to work and the mechanics and all the other things that go into a product like this. But it seems like of the two, I would wager we'll probably see the Voldex before the Whaley product. Whether it's this year or not, I don't know. Maybe. So we'll probably talk about that one. And I guess there's still so much unknown about the Whaley one, whereas the Voldex appears to be pretty straightforward, at least conceptually, that it's this product that essentially is VIX without the skew, without the curve. Essentially, remember they revamped VIX listeners. They added in, the out-of-the-money calls and the put wing, and they let that have some impact on the VIX calculation, which, of course, some people have said is problematic because we see things like, they call it carpet bombing or quote stuffing, whatever the case may be. People loading up on these far, far out of the money, completely worthless puts on days like expiration and settlement, trying to game the settlement out there in the VIX. And so people say if you don't have a product with that, you can't do that, hence Voldex being just quite literally the at-the-money implied of the S&P 500. So in that sense, maybe from a simplicity factor, maybe the Voldex will be the one I guess say has the best chance, but it is so theoretical right now that it could be anyone's ball game. Jared, do you have any are you weighing in on any of these horses yet, or are you kind of playing wait and see on both?
No, I think they're both interesting ideas, and I think that's the absolute limit of my commitment right now.
Spoken like a true researcher, sir, playing the wait and see game. Well, we'll get a little bit more input on Voldex in a couple of weeks. Scott Nations, he is, of course, the creator of that product, will be coming on this show in October to discuss it, and we can pick his brain then and maybe get some more answers on some of the specifics of that product at that time. So stay tuned for that, listeners. Maybe we'll get Whaley on the show, too, and we can have a point-counterpoint. That'd be kind of fun. All right, last up here. I think you'll appreciate this handle, Jared. You're a diehard philosopher. It's Atlas Smirked. I kind of like that. He writes, what is a reasonable skew level for the SPX? At what level should I be looking to buy puts? Where should I be thinking of selling them? A pretty straightforward question. We've talked about this in the past. I know you look at this a lot in your research, Jared, where that level of implied vol is in the put wing versus the at the money versus the call wing, and how that stacks up to historic norms. So why don't you go ahead and let our listener here, Mr. or Mrs., I suppose, Atlas Smirked, what your feel is for a relatively normal level of skew, aka premium in the downside puts, and what gets into some of the crazy territory.
I think a good way, and I think we spoke a couple episodes ago about different ways of measuring skew, and that's probably the first thing you have to get clear on is what exactly what points on the curve you want to measure, and if you want to normalize them. One of the most widely used measures is to take the difference between 25 delta, out of the money options, and divide that difference by the at the money implied vol level. That way you get a measurement, an estimate of the difference between out of money put and call implied vols. But it's not just if you just look at the point value, then really you're still going to be talking mostly in terms of changes that have to do with the overall level of implied vol. Normalizing it or taking the ratio against at the money levels gives you, I think, a little bit more of a apples to apples comparison at different points in the time series. But unfortunately, once you do all of that work, the number that you end up with, it's going to be like a very small, decimal number, isn't especially intuitive. But for a little bit more intuitive, back of the envelope measure, usually in SPX we see, anywhere from 2, 3, 4, 5 points implied vols higher at, say, a 30 delta option on the put side. And in the call side, you can actually have some really interesting changes in the curve. Sometimes the call side is pretty steep as well, and out of the money calls are several points lower than the at the money implied. Other times you can have a call wing that's relatively flat. So I think it's actually more helpful either to look at some kind of normalized measure, like I mentioned, or just look in terms of the shape of the curve in a kind of a graphical, visual way. If you see something that looks unusual versus how the curve normally looks, then that can give you something to start with in terms of research for a trade opportunity. Otherwise, like I say, coming up with an intuitive number is a little bit more tricky unless you just get used to one of your favorite measures and then work from that.
All right, good stuff. Thank you, Mr. or Mrs. Atlas Smirked, as well as everybody who wrote in. We love to hear your questions and comments. Keep them coming. No shortage of ways for you guys to do just that. You can, of course, hit us up on the website, post a comment, or use the website feedback form there. You can find us the old-fashioned way, questions at theoptionsinsider.com. Just be sure to put question for volatility view somewhere there in the subject line so we know where to route your question. Of course, you can find us on social media, twitter.com/options, facebook.com/theoptionsinsider, or of course, find all of that baked into the old mobile app, the Options Insider Radio mobile app, available for iOS, Android, and the Fire OS. So no shortage of ways for you guys to join your fellow listeners, make your questions and comments heard here on the old Volatility Views program. And now we're going to keep on rolling right on into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, and welcome to the crystal ball segment. This is indeed the portion of the show where we prognosticate recklessly, wildly, just without any abandon, really, just crazy here in terms of volatility prognostication. Whatever the vol gods hold in store, we will attempt to divine it now. We'll start off with you, Mr. Sebastian. Let's get reckless. Let's get wild. What are you thinking for vol for the week to come?
I think that, we're getting a little bit of a spook ahead of the weekend, and we're going to come in Monday and Tuesday, and the Fed meeting will come out, the Fed stuff will come out, and they're going to torch the volatility. And like Jared said, once that Scottish vote gets through, all the real big geopolitical stuff is out of the way. Good night volatility. Any kind of soft we're getting from Russian sanctions, one-off event. I don't see how those extend anybody. I mean, is Russia even really that big of an economy? So, I think Russia's economy is smaller than California's. Isn't that right? To quote Michaela, I'm unimpressed.
And Mr. Jared, what are you watching for the week to come from a vol perspective?
I'm on the same page as Mark for the most part, although I do think that with the strength in retail sales data we got today, overall positive picture. I feel like as soon as we get some average hourly earnings in the U.S. that it suggests a slightly better picture than we've had for the last year for low and middle income workers, as soon as there's a hint of wages starting to inch even slightly higher, I think that you're going to have a sea change, not necessarily in Fed governors, but in the perception about timing. If we assume that the base case for interest rate hike is in the late spring or early summer of next year, I think that you could get some positive wage data, some good employment data that starts to gradually pull people's forecast slightly forward, and I think that the market's going to reprice as soon as that does happen, which might not be next week. But we've been, I feel like, not to borrow a phrase from the policy bears and the skeptics and all those guys for the last several years, but we have been trading, I think, in terms of vol on borrowed time this year. That short vol strategies have worked really, really well. They've also been really painful, and I think they might keep working, but I feel like the clock is ticking, and so it's probably a good time to revisit risk profiles and margin requirements.
All right, thank you for that, Jared. And that's going to do it for the Crystal Ball segment. It's also going to do it for this episode of Volatility Views. But before we go, as always, I want to check in with each of my cohorts here on the old Vol Views panel, see what they have cooking that may interest you. We'll start with you, Mark. I know you guys had the big option pit explosion this week with the 3-day extravaganza at the CBOE and, of course, the live radio show yesterday. So what else can our listeners look forward to coming down the pike from you guys over there at the pit?
We've got a free webinar on the 24th, an introduction of the VIX and VIX ETPs, and go to optionpit.com/freevix to register. Good times.
Free VIX, a good SEO term, sir.
Thank you.
All right. You're now free to run about the country, sir.
Thanks, dude.
No problem. Take care. Have a good one. All right. And Mr. Jared, what's coming down the pike over there at BGC Partners?
Well, we just came out with a note this week looking at options in Yahoo ahead of the Alibaba IPO. There's an interesting opportunity in there that we have a kind of a deep dive into to look at some potential trade opportunities. I think I'm going to continue to be interested to follow this stock, both Alibaba once it lists and continue to follow Yahoo, because there's an interesting dynamic at work that is worth, I think, consideration. In terms of future work, I'm still looking for new ways to break down equity sectors and industries to sift through and find interesting vol opportunities, and that's going to keep me busy, I think, for the foreseeable future.
Yeah, the Alibaba Yahoo stuff is really interesting. I see a lot of people prognosticating on that, a lot of people speculating on ways you can use Yahoo as a bit of a backdoor into that Alibaba IPO, no verticals and things like that. So I'll be curious to see what your guys' take is on it as well. Good stuff, Jared. All right, on behalf of Jared and Mark, I want to thank everybody for tuning in, and we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.